Hey, what's up, guys? This is Sam, and I am the Director of Equities at Simpler Trading. And today I'm going to be showing you how to set up your charts to look like mine on Thinkorswim. So let's dive right on in. We have a little bit to cover here, and I'll make sure to explain everything as we go along, so you'll be able to kind of recreate the setup on your end if you choose to. And I'll also explain the purpose behind every indicator and why it made it on my charts. So let's dive in here. The first thing you'll notice is that I'm using a 4-panel multi-time frame window. Just kind of a fancy way of saying I'm looking at the weekly, the daily, the 195-minute, and the hourly. And I think this gives me a pretty good view of the market, both from a large perspective, which is the weekly, down to a little bit more granular perspective, like the 60-minute. So this covers all my basis for the strategies that I typically will use. And the one thing that I will explain here is the 195-minute is somewhat of an awkward time frame if you're unfamiliar with it. The reason that I use a 195-minute time frame is because if you take a traditional trading day, which is 390 minutes long, 390 minutes doesn't divide equally into an hourly time frame, right? So you're always left with a little bit of an unusual hourly candle at the end where it's only 30 minutes. And I just found that, well, this is actually from John Carter, but John started using a 195-minute chart so that he can get 2 bars per day and kind of get a little bit of an inside look, if you will, at the daily candle. I also like it because one candle gives you the open, and then the other candle gives you the close, essentially. So, pretty helpful time frame. I like it quite a bit, and it has made my final trading grid. So let's start covering the price indicators here. We'll start with, we'll actually just focus on the daily chart because pretty much everything that's on the daily chart is the same thing on all the different time frames. The only difference is the time frame. The indicators are exactly the same regardless of the time frame. So I can explain to you everything on the daily chart, and then if you like this multi-time frame approach, you can just take that concept from the daily and apply it downstream to the 195, the hourly, or upstream to the weekly. So let's start here with the easy part on the daily, which is just the moving averages. The white line here is the 8 EMA. The green line, 21 EMA. Blue line, 50 SMA. Red line, 200 SMA. And I found that about 4, maybe no more than 5 at least for me, moving average is plenty enough. This covers all my basis. It covers everything that I need. It covers the momentum. It covers the long term. I'm very happy with just having 4. And they're the same on all time frames again. So this would be the same 8, 21, 50. You can't see it down here, but the 200's down there somewhere. And it's the 200 SMA. So that covers the moving averages. In terms of the daily chart here. Now, above the moving averages, above and below actually, you see the dotted white lines here? There and there. Those are ATR bands. Now, if you're looking to add ATR bands on ToS, you'll need to type in Keltner, and it'll pull it up there. Keltner. And that's the same thing as an ATR band. Now, the question when you do Keltner channels, the traditional one that I would typically use is a 2 and a 3 period. I've taken off the 3 period just to make my charts a little less crowded, but I have left the 2. So let's go ahead and talk about that one for a second. You can have as many as you wish on your end. So this is the 2 ATR Keltner channel. I use a 15 period. Now, by default, it uses a 20 period. And if you follow John Carter, he uses a 21 period. For my testing, I found that a 15 period just kind of did the trick a little bit better for my personal style, right? So the dotted white lines there, that is the Keltner channel or ATR band set on 2 ATR on a 15 period time frame. And the reason I do that, or the reason that I even use the ATRs at all on my charts, is because it can be helpful in isolating points where price typically likes to stay basically between the ATRs. Most of the time. Of course, you'll see plenty of examples where price gets above the 2 ATR and goes to 3 ATR, or in Tesla's case, 100 ATR. But by and large, statistically speaking, most price action tends to take place between the ATRs, right? So it is kind of helpful, and it also is helpful in isolating when prices maybe run a little bit too far, either to the downside or to potentially to the upside here. So kind of a unique tool there, and I certainly like using it. The last thing that I use on the price chart itself is going to be this horizontal supports and resistance. Now, you'll see it in the form of this green line or the red line down here, the flat horizontal line. What that basically is showing you is it's just showing you previous highs, right? So that green line up there, that's just based off this previous high, right? So just like you would visually, or maybe you draw it in manually, you draw it in there, and this previous high, which was resistance before, becomes support on the way back down, right? At the end of the day, really just think of it as previous highs and lows, less so as support and resistance, although that certainly does apply. And then the red line is just previous lows. So you can see down here, this would be your previous low, this would be your previous high. Here on the 195, that's your previous high. You have another previous high here. On the weekly, your previous highs are all through here. So pretty helpful tool. That one is called ST Swing Levels. It's actually not out yet. If you want the exact one that I'm using, it should be out in January of next year. However, you can fill in the gap using something like Darvis. So if you go on the Simpler Trading site and you look for Darvis, it is a free tool that one of the traders has here, and it would fit it would at least close the gap. If you're interested in something like that. If you want the exact one I have, again, it's called ST Swing Levels, and it'll be available in January. But it's pretty helpful thing there, because it just automatically and quickly shows you, hey, that's a previous high, that's a previous low, and then you can just trade around that. So that covers pretty much everything on the price, from the ATRs to the moving averages to the swing levels. Don't want to have too crowded of a chart, so that's all I'm going to have on my actual price charts here. This covers pretty much everything that I needed to cover. Tells me the stories that the market is trying to tell me in terms of price action. So below price is the squeeze. Now, I'm sure most of you are going to be familiar with the squeeze, considering that you're probably looking at this on either simplertrading.com or the Simpler Trading YouTube page or something. But the squeeze is something that pretty much every trader here uses for good reason. It's an indicator that's pretty unique, because what it does is it shows you moments of compression, kind of like back here when you have red dots, or here when you have red dots, or even here when you have black dots. That still counts as a squeeze. Again, over here on the hourly as well, the red dots there. And whenever you have red dots like that, basically it means that you're in a compression phase, right? So your price action kind of looks like this, kind of just getting real compressed. And as options traders, we like to make money from these bigger than expected moves. Oftentimes, these bigger than expected moves can happen out of a squeeze structure. So something like this results in something like this. Something like this results in something like that, right? So these big outsized moves that options traders love to trade. And so the squeeze is pretty unique in that. At the end of the day, what it does in a very unique and strong way is it finds these moments of compression or consolidation, and it tries to give you a signal before you're about to get an expansion, either to the upside or to the downside, so that you can be prepared for it. So there's a lot of other literature out there on the squeeze. All of us here use it for good reason. One of the absolute best indicators, and one of the most unique indicators that's out there. Below that is where we start to get to the momentum indicators, and I have two. Now, just a quick point here before we continue with the description and how we use them and everything like that. By and large, I found that most folks will need two momentum indicators. And the reason I say that is because typically one momentum indicator, in this case this one, will cover you for price action that looks like this. So if you have kind of a trending chart or a range bound chart that looks like that, then you need an indicator that captures that, and the high-low does that very, very well. And that's called more range bound or chop. And then you'll need another indicator that does the opposite. So you'll need another indicator that really works better with prices that look more like this, which is more of a trend, right? Because you have higher highs, higher lows. Now, the best, of course, would be if you can find one that works really well for a specific case. Like in this instance, the high-low works really well for oscillating markets or sideways. But it also tends to work decently well for trend, which is why I like it so much. So let's focus here on this one. This one is, again, the high-low oscillator. It's not available as of right now, but it will be available again in January of next year. Basically, like sometime in January of next year, it'll be available. And I'm pretty sure, a lot of you guys are going to want this one. I've gotten a lot of interest with it because you guys have seen how it works in the room or maybe in the YouTube videos. It's very easy, very kind of clean. And the way to read it is, if you're trading above the center and near the top, so let's say you're trading in this half of the indicator, you read that as bullish, right? So if you're above 50, anywhere above 50, especially if you're climbing like this, through 50 like that with an angle, that's really bullish, right? And you can just see it in the price action. And then when you start to do the opposite and you start to trade below 50, right, then that means you're a little bit more under selling pressure. So above 50, bullish, below 50, typically bearish. It comes with an additional kicker. The indicator also comes with buy and sell arrows. So you don't want to be just kind of clicking buttons based on just the arrows themselves, but you can also see how they work pretty well. So the gold arrow will be the earliest buy or sell signal, and you can get a gold arrow in either the top or the bottom. It's the earliest possible sell signal. It's the earliest possible buy or sell signal you could get. So you got one here, and then you got one down here, right? Very close to the lows. And then the secondary sell signal is, or the secondary signal, I should say, is just the pink arrow. So yellow, pink, red, that's a confirmed sell signal. Yellow, pink, green, that is a confirmed buy signal, right? And you can see that generally speaking, it kind of captures the highs and lows pretty well, especially when you're range bound. So pretty cool. Very easy to use indicator, I think. And one that's just extraordinarily helpful. There's a lot more detail I could drive into this one. A lot of little nuances, little tricks of the trade here and there. But I think just covering it basically like that makes sense for the purpose of this video. And it just is one of my favorite indicators by far. The lower indicator is the trend oscillator. So again, you want to use this indicator kind of like when you have a market that looks like that and it's trending, or kind of like that and it's downtrending. It just typically works better in trend, hence the name. And the way that you use this indicator down here is you have to ask yourself, is the green line above the red or both above the middle? This condition right here, where you have the green line above the red, both above the middle, is kind of the ideal bull structure, right? Because what does that mean? Well, a lot of folks will use moving averages to determine the quality of the trend. And there's nothing wrong with that, but at the same time, you're not getting any real nuance with that, and the moving averages are always the last things to move. Just by their very design, they're always the last things to move. So if you're always focused on moving averages, you're always going to be a little bit late. There's nothing wrong with it, but you're always going to be a little bit late if that's all you're focused on. So for example, here you have the 8, the 21, the 50, the 200. You see how they're stacked sequentially? We call that a bull stack. It's a bullish orientation. It confirms a bullish trend. But how do you know exactly whether you should be buying here at the 8 or at the 21 or at the 50? Right? It's not entirely clear where you should buy. You just know, hey, if it pulls back anywhere between here and here, I want to buy. But where do you buy? That's the point of the trend oscillator. When you have a condition that looks like this and the lines are flat, that means you're losing trend quality. So that means that you should be falling back to the lowest possible moving average, especially after you have a sell signal, right? The sell signal will hit first, and then you look to fall back to something like the 200 right there, right? Because that's your lowest moving average. In this instance, on the flip side, you know green above the red, both above the middle. What does that mean? Well, that's your most bullish orientation. And basically what that means is you can buy the 8 indefinitely. Right? You don't typically even have to wait till the 21, which is where most folks would want to get in for a conservative entry. You could just buy the 8 because you have trend structure in the form of the moving averages, but then you also have confirmation of the trend quality via the trend oscillator. So that's just a brief recap of how these work. I will be doing a longer video on the trend oscillator, so if you're a little bit more interested in that, be sure to check that out. But aside from that, applying the indicators that we just talked about on the daily chart. So again, 8 EMA, 21 EMA, 50 SMA, 200 SMA, alongside with 2 ATR bands. And then if you choose to, the ST swing levels to automatically show support and resistance. Below that, Squeeze Pro. Below that, high-low oscillator, best used for range-bound or choppy markets. And below that, the trend oscillator, which works best in trending markets. And the cool thing about this is if you set up your charts like me, this covers you for pretty much every market condition, right? You're covered for range, you're covered for trend, you're covered if the markets do nothing, right? Each indicator is a unique part of the story, and that's the way it should be on your end as well. So I'll leave you with this thought here. If you choose to copy my setup, I highly encourage it. I think it's a great launch point, and then you can adjust it based on your own kind of personality or your own needs. But if you're using your own setup, the only thing that I would add to it is make sure that you go through it with a fine-tooth comb and make sure that each indicator that's in front of you on the screen at all times, because we sit in front of these screens all day, it's very important real estate that's in front of us. Make sure that each indicator that you use on your chart has a specific purpose that you can define and qualify. And if you can't quite define it and qualify it, then maybe get rid of it. So I'll go ahead and leave you with that. Be sure to check out the trend oscillator video that will be coming out next if you're interested in a little bit more information on that. And I hope you get a chance to check out these indicators when they come out in January. All right, guys, that's my time. Have a great rest of your day. Thanks for checking us out, and I'll see you for the next video. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video. And before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.